Welcome back, Business 110 students. We're going to talk a little bit about the balance sheet today and how to read it. Again, you can go to Yahoo Finance and download or view any public company's income statement, balance sheet, cash flow. Balance sheet basically is going to tell us how much equity, stockholders' equity or net worth or wealth a company has. So if you take all its assets, which is everything a company owns, and subtract their liabilities, everything they owe. The difference between those two is either called stockholders' equity or net worth, but it's basically what do I own minus what do I owe is what I'm worth. So a couple questions again, if we sort of think of this in terms of if we were purchasing a business, I would think how much net worth or how much stockholders' equity does the company has? Is it wealthy? Can they pay their current bills? Do they have a lot of debt or very little debt? In other words, I think of it sort of like a personal basis. Do I own a high percentage of my house, or is most of my house owned by the bank in the form of a mortgage? We can learn all of these things by looking at the balance sheet. So let's take a look at, again, let's take an example. Let's take a look at Apple. Apple has total assets of $231 billion. They own $230 billion of stuff. They owe $120 billion. They have ownership or net worth or stockholders' equity of $111 billion. Now, if you look over here, we said what percent of all these assets? Who owns it? Who owns this $231 billion? Well, 52% of it is owned by other people that we owe liabilities, people we owe it to. 48% is owned by us. So it's, again, very similar to the mortgage example. Apple owns roughly half of their house is in their equity. The other half is owned by the bank or debtors or liability. That's not a bad ratio. You begin to get a little concerned when folks own more than, say, just like a house. You want to put at least 20% down. If more than 80% of your company is owned by somebody else or by debtors or creditors, that tends to be a little bit concerning. So let's go back to our friend Sears. Now, we looked at Sears 2004, and this is their percent of their ownership, not 2013, sorry. Instead of $111 billion of stockholders' equity, Sears has a little over $1 billion. And notice here, 90% of Sears is owned by creditors. Very little of Sears is owned by the stockholders. So, in a sense, somebody else owns most of Sears. Creditors own most of Sears. And again, as a rule of thumb, this starts just like with a mortgage. This starts to get up to be over 80%. It's a little concerning. So that answered kind of the first question, what kind of wealth do we have and are we wealthy? Second thing you can find out from a balance sheet is the company capable of paying their current bills? Because you can be very wealthy, but if you have no money in the bank, you might not be able to pay your current bills. So there's a thing called a liquidity quick ratio, which simply takes what are your current assets. So now we're just looking at assets that are less than a year old and compare them to our current liabilities or our current debts less than a year old. And what is that ratio? So we just take this number divided by this, and we want this number to be larger than 1. Simple terms, we want to have more money in our wallet than what we owe. Now, it'd be nice if it was up around 1.5 or 2. I'm not too worried about Apple because they've got $13 billion in cash, and they can certainly convert things relatively quickly. So that tells us, by looking at our current assets compared to our current liabilities, what kind of shape are we in to pay our current bills. The last thing we'd want to know, which we've sort of already looked at, is do we have a lot of debt? Like, who owns the company? So here's the same thing. We took Apple. We took their total assets, their total liabilities, and stockholders' equity, and we said, what percentage of their total assets is debt or liabilities. And it's the same number we looked at earlier. About 52% of Apple is owned by creditors, and the other 48% is owned by stockholders. Again, you get concerned if this starts to become over, say, 80%, like it is with Sears. There you can see Sears, it's 90%, as we saw earlier. So that hopefully has answered the balance sheet. We can see what kind of net worth, how wealthy is the company, are they able to pay their current debts, do they have a lot of debt or very little debt, is most of it owned by stockholders or owners, or is it most of it owned by creditors? Those are the things you can learn about your company by looking at the balance sheet.